Hello students, today we will see practical questions on underwriting of shares and debentures. Question number 1. It's a simple small question. X Limited issued 6,000 equity shares of Rs 100 each and entered into transaction with Maganlal and Company, who agreed to underwrite the whole issue at a commission of 4%. The public applied only 5,000 shares. So how many shares issued? 6,000 shares they issued. How many public applied? 5,000 shares. Hence, the balance was taken by the underwriter. Past journal entries in the books of the company, assuming that all amount has been received in full. Journal entries in the books of X Limited as X issued equity shares. Bank account debit to equity share application. Application means how many shares applied, that is 5,000 into 100, 5 lakh. So immediately we transfer to that equity share capital. So equity share application account debit to equity share capital account 5 lakh. Remaining 1,000 shares, that is Maganlal and Company account debit to equity share capital 1 lakh, that is 1,000 into 100. Commission is on entire subscription. So underwriting commission account debit to Maganlal and Company, that is on 6 lakhs. 6 lakhs into 4%, that is 24,000. Bank account debit to Maganlal and Company, that is 1 lakh minus 24,000, 76,000. Question number 2. Surat Textiles Limited issued 50,000 equity shares of Rs 20 each and entered into transaction with Amichand and Sons, who agreed to underwrite the whole issue at a commission of 5%. The public applied only 47,000 shares, hence balance was taken by the underwriter. Same like earlier question, pass the journal entries in the books of company, assuming that all amount has been received in full. So